This is Market Week Live, September 6, 2024. Information and support for traders and investors. Welcome, everybody. We have people pouring into the room right now and a lot of people out there right now on YouTube Live. Glad to have you all coming and tuning in here on the show. A little bit of legal that we need to do. It says everything that we bring to you is for entertainment and educational purposes only. It's not investment advice. The sole purpose of everything we bring, oral, written, or in videos, anyway, referring or relating to this website, is to provide information you can use or discuss with your investment advisors for your investment decisions. We always want you to consult your own trading plan or financial professionals that you work with before making investment or trading decisions. Please refer to our terms, disclaimers, full legal information at askSlim.com. Want to invite you to go to askSlim.com. Though a lot of people in here are tuning in now for the first time, and do explore around. Make sure you subscribe where you can and share the information so that people can benefit from what we do. If you're new, go to our free stuff up at the top of the askSlim page. And in there is Snapshot Lite. You'll be able to get our information that Matt puts out every single day, daily information on the S&P 500. That's absolutely for free with no credit card. On YouTube, do subscribe to this channel. Click the notification bell. You'll know when we put up videos. And like this video, give it a thumbs up. On X, follow me at askSlim. Any questions you might have, write to Matt at askSlim.com. Anything for our members that you have questions that you want to ask, write to team at askSlim.com on your membership issues or anything you see on the website issues. And if you're interested in getting more information on our content of education and analysis, or if you want a first-time special, or if you want to upgrade, write to Matt at askSlim.com. He's got all kinds of goodies for you in that regard. Your hosts today, well, we have the full team. RV is going to be a little bit late as he gets to the show, but we have all of us here. I'm, of course, a 50-year trader and analyst. Matt Serpy, a couple of decades. RV, about the same. Katie, just a fantastic expert in options and brings together all of our styles of analysis along with option trading. And you can find out about us by going to askSlim.com, about askSlim, and meet the team. And you'll be able to see a lot of information and some interviews that we did that really help you understand who we are and what our background is. How do you watch the show? Well, our premium members receive a link, and they are the ones that participate in the Q&A. So I'm going to invite right now our members that are here on the Zoom feed to start putting your questions into the Q&A, and then we'll get to those in the Q&A section. People that are free members, non-members, you're the ones that watch it on YouTube, and for all the new members or all the new viewers that are here right now, we welcome you. And that's at the askSlim Team channel on YouTube. Coming up in this show, I'm going to bring you the opening comments. We have all of our hosts that are going to do trade planning with the askSlim team. What happens is each analyst shares a trade idea and takes the total approach of the way we do our trade planning and shares that with you. Matt has a review of our services. You'll see the great depth of the things that we bring. And this is a special to the last weekend for our level 4 special. So please do take advantage of that. Our express round is going to be where we do the Q&A. And I see some questions right now coming in for the Q&A. So you can put those in. We'll do about a 10 or 15 minute segment there where we show you the analysis that you want to see, or if you have other questions on our services, on our trade planning approach, the style of analysis that we do, or other trading issues that you may have personally, you can put those in there. And then I'm going to bring in my stock market analysis, multiple time frame analysis on the stock indexes. Here's my commentary on the market. And this market, as we all know, saw the stocks weaken considerably. It was a holiday shortened week, and that followed a markup that we had at the end of the month last Friday, a big close to the upside. A lot of times when that happens, sellers come back into the market, and we saw that happening in a big way this week. The biggest down day was Tuesday, but Friday is getting pretty close to that right now. NVIDIA was still weak on Tuesday as we got into the beginning of the week on their poor or worse guidance that people had hoped for. But then, of course, there's this antitrust case. And that had NVIDIA down sharply on Tuesday, 10% to the downside. We've seen a lot of weakness in the semiconductor stocks. TSM, Taiwan Semiconductor, got slammed, and that killed semiconductor stocks also. We saw that happening today also as Broadcom came out with their earnings. So we have a lot of pressure on techs and on semiconductors. On Tuesday, that decline in the S&P 500 was 120 points, and that's with a big close on the upside as it rallied 25 points. It was down over 145, so it was a bad day on Tuesday. Wednesday tried to rally back up, but that was aborted as we saw DIX, and I'm going to show you that DIX chart in a moment, come out, and that stock got hurt. We're seeing a lot of the retailers under a ton of pressure, and I'll speak to that in just a moment, as Dollar Tree also absolutely cratered to the downside. The Dollar Tree actually said on that day, Wednesday, it is the worst environment they have ever seen. That's a big statement. Thursday, we had a lot of chop in the market. ADP came out. It was only 99K. That was much weaker than what was expected. And we have a lot of data that came out on Friday also that was a lot weaker. Of course, that has helped the bond market this week. Friday, the payrolls came out. They were 142,000 versus 161 jobs that were created, but you cannot believe any of these numbers. They're all bogus. We saw what happened is that at the same time, they downgraded June and July by a large amount. And that just shows you that they kind of want to give us numbers that look good, but then they go back and revise them. As if you remember, just last month, they removed 813,000 jobs that they had reported to us in the payrolls for the previous 12 months. So it's all just a plain out lie. Indexes here on Friday, they chopped up and down on that news, but then the sellers came in and absolutely getting slammed. Here at midday, the S&P 500 is down 90 points. Big selling, down 500 in the NASDAQ, and it is another very, very weak day. For the stock market, this is a really interesting time because there's a battle between the bulls saying that, well, interest rate cuts, those are bullish, and if interest rates are going to go down, it'll stimulate the economy, and then we'll be able to keep this big bubble that we have going, continuing to go. On the upside, the bears, well, they say interest rate cuts are coming, and that's because the economy is slowing. And that cuts are coming even now as the inflation rate is high. You remember back for a decade when the inflation rate was at 1.6, 1.7%, they kept interest rates at zero because they wanted to get interest rates higher. Now we hear with about a 2.8 or 2.9% inflation rate, if we can even believe that. Well, now they're cutting interest rates and they're not even at their target. So they're worried. There's a lot going on here as far as a slowdown goes. And I'm in that camp of a sharp slowdown coming or a recession that we may already be in. And when that happens, interest rates, they do go down as the bond market gets a big rally, and what happens is that earnings get downgraded. Earnings fall very hard, and we end up getting a big decline in the stock market. And there are anticipating the trouble that we're going to have in the economy and earnings being bad. You want proof? Well, what's going on right now? GDP that's downgraded for Q3 to only gaining about 0.6%. Leading economic indicators have had months and months and months of going down. In July, they were down another 0.6%. The conference board came out and they say that big business is cutting back their spending significantly. Consumer confidence falling very hard. Credit card delinquencies They're 9.1%. That is near a historic level for credit card delinquencies. You know, after the pandemic, when all that ridiculous pumping was going on, people got a sense that they were given a lot of money, and the savings rate went up, and they spent it all. And now consumers are tapped out. The savings rate has absolutely plunged. And with consumers tapped out, well, companies are really getting hurt. I'm going to give you some proof of that right now, really quickly. Look at these slides very quickly, these charts I'm going to share with you. This is Dollar Tree, Consumer Red Alert. Look at this stock, comes down all the way from about 140 down to $60 in the last 6 months. This is what happens when the consumer gets tapped out. And you know, Dollar Tree, those are dollar stores. That's middle America that's going in there and shopping, and they are really getting hurt. That's Dollar Tree. Consumer Red Alert. Look at here, Dollar General comes down from 165 all the way to $78 in the last 6 months. This is another sign that there is trouble there out in Consumerville. And these are signs that we're really into a big slowdown and big trouble there for the consumer. That is 70% of our economy. How about Five Below? This is another one. Stock was over 200, comes all the way down to about $65. You can see on the bottom on a slim ribbon PO how that was red all the way down there, just telling you the trouble that it's in. Now it's neutral, but this is another big sign. And just this week, Dick's Sporting Goods, one of the favorites, of course, as people just absolutely love to go in. And I walk in there all the time. I mean, they got fantastic selections of clothes and sporting goods and sports that I don't do. And it's just a great store. But look what's going on here. That island reversal is devastating. And this stock is likely to just be starting a major downtrend. So you can see in there that the consumer is really hurting. And like I said, without the consumer, this economy is really in bad shape. I'm going to show you Amazon in just a moment, because that's the stock in this group of retail that I've decided to share with you my analysis on, and I'll take you through that, and you can see why I think Amazon is also in big trouble. So now that I've showed you all of that and giving you all the reasons why the economy is slowing down and all the proof to that, well, there's AI. And of course, AI is what has been pumping this market and pumping the economy. And of course, the yen carry trade is what really has got all of that moving up in a very speculative way. We've seen that in Bitcoin, which is now coming apart also. And AI is not going to give the leadership that the market needs, the stock market needs, to keep moving up. In fact, just this week, Goldman Sachs came out and reported that the ChatGPT website, which just absolutely had massive amount of hits coming in, now has had a massive plunge in activity on their website. So all of this hype that's going on in the ChatGPT, people may be just deciding that, well, they don't need it all that badly. And that's why there's a lot of pressure on all of these stocks as we see these tech stocks going down. I don't think AI is going to give you good leadership to the upside. So that puts it all on small caps. But I'm showing you what's going on now in the retail category, and there's a lot of small caps in that category, a lot of small caps and techs that are not going to do well. And yes, interest rates go down, the small caps go up. That's the way it works because they borrow a lot of money. But I don't think the small caps are going to carry this market in this environment. And we're going to see a rally. The market is getting slammed right now. But our work, and I'll show you this later on, says that there's going to be a rally in the stock market. So everything I just said is really about the bigger picture. Short-term traders, you're probably going to get an opportunity to play the upside pretty soon. And I'm going to show that to you. Again, as I said last week, I'm talking to investors. And investors, I'm telling you, in the next rally, it's going to be an opportunity to lighten up some risk, because I know you're feeling the pain right now. Traders, I think this is a really good opportunity for being a good trading environment. And we're going to look for two-sided trade and even some upside movement coming, starting maybe in the next week. And maybe that'll take us out sometime into mid-September, maybe a little later than that, before the market gets slammed again. That's my opening comments on the markets. For this week, stocks down 4 or 5%, depending on what index you look at. The worst was the small caps. The Russell Dow actually is better. It's only down about a couple of percent right now, and that had made an all-time high just in the last week. Bond market, 30s up 3 points, a big week in the bond market as yields fall all the way back down to just under 3.7% on the 10 years. That's 20 basis points on the downside. Gold, it's a rock, absolutely solid. It's given just a little ground, a few bucks to the downside here this week. Silver and the other metals, much weaker. Silver down about 50 cents on the week, and that's all about the slowing economy. But the strength in gold, there's a lot of reasons for strength in gold. And that's way, way different than what's going on in the economy. I think it's much more about de-dollarization going on in the world. And I'm going to have a lot more to say about that in coming weeks. So the dollar loses about 0.5% on the week. Oil market plunges $4.50, $4.70, depending on where it is right now. I can't really see that. And this is on the slowdown in the world. World economies, China slowing down, Europe really slowing down. And supplies going up in the oil market. And OPEC, which said they were going to be increasing production, now it's backing off on that. Said, well, maybe we'll wait a couple of months to increase production, but they really need to do so. So there's going to be plenty of supply of oil. And we talked about oil when it was in the 80s, heading down into the 60s, and you could see that happening right now. That's my opening commentary for the week. I have a feeling you found it interesting. This is Trade Planning with the askSlim team, from the analysis to the trade idea. I'm going to bring you my analysis on Amazon. Now, if you didn't watch the beginning of the show, I talked about and showed you the problem in retail, and I'm going to show you that right now, how that carries into Amazon and how our analysis suggests Amazon will be going to the downside. I'm going to show you a short side trade, intermediate term outlook. Katie's going to look at light crude with a short side trade for an intermediate term outlook. RV is going to look at lows, and that's a long side trade for a short term outlook. Interesting, the long side trades are short term, and the short side trades are intermediate term. So it gives you some sense about what we're seeing here in the market. Matt's going to bring you deer on the long side, also a short term outlook. So let's get started as I switch over to Amazon. This is the Amazon chart. And what I'm showing you is cycle analysis. There's some people that have never seen this before that are looking at the show right now. And we are simply looking at the rhythms of money flow in the market. This on the bottom that you see right over there, those are called cycle brackets. That simply helps us identify the money flow rhythms in the market where there's a common movement of advances and declines in the markets. We can see the trends as you see here on the upside. Amazon's been great, but something is changing. Let's highlight what I see here on the weekly chart. So again, this is a cycle from trough to trough. That's how we measure it. And these are the cycle rhythms in here, and show you the average length. Every single cycle, every single symbol has its own cyclical period. This one is 35 bars or 35 weeks that we have in here. And I see that just by highlighting it, it says 35 weeks right there. Now, this is an upside cycle. We call this a positive translation because the peak came way on the right side of the cycle. The same thing happened right over here. This is different. This cycle has broken down already. As it came up, made a new high, as would be expected, and then came down and took out this cycle low right there with all of this time left to go. So the low over here, and I'm just going to bring these over. I'm going to duplicate this here. So I'm going to show you the range of where we expect the low come, or the trough in here is somewhere out over here in the beginning of 2025. So because this broke down, it says that the rally will likely fail in resistance. And you see that going on right now. Also, you see in here that as it was moving up, our reversal scout showed you it was bullish. When it rolled over, you had a correction. Here it barely could roll over. And here it rolled over right there and is still negative momentum. Negative momentum, breakdown in here, failing in this area right over here. The probabilities are very high. I'm going to make it 70, 80% that this low gets taken out right over here, 151, sometime between the next quarter and the first quarter of next year. Likely going to happen sooner rather than later, because I think that the stock market is going to get hit into this September, October, November period. So, and you can see in here the projections coming down to as low as about $141 over here, which is the major 50% retracement level. So this is weak. So now let's take a look at the daily chart. The picture here is a little bit different for now. So you can see in here the same cycle rhythms, the same beautiful patterns that we've seen. And right over here, we're looking at a cycle that made its low, you had a rally, and is coming down again. This looks to me like what we're going to see is we're going to see some back and fill in here, maybe another attempt to get up here to about 182 or so, somewhere in these resistance areas, and then turn down. This period over here in late September starts to align with the period of risk in the stock market. If you get under this level right over here, which is the low at 168.92, that will be a bad sign. That will be a sign that Amazon has already succumbed to the forces on the downside that we see here on the weekly chart. I would expect that it would not do that, because this was a pretty good pattern in here, and it says to me it's likely to keep trying over here for a little bit, but then I think it's going to move down again. Keep in mind that low right over there, 168.92, if that gets taken out, it will be a bad thing, and it will say that Amazon has already turned lower for the next wave to the downside. It's been trying to rally this week, and I wouldn't be surprised if buyers come back in. So my analysis says that if it does rally up in here to near that high right over there, let's say 182 to this resistance right over here, 182.78, another one over here, 187.50. I don't think it's going to get there, but this is my sell zone right up over here. That will change if you break that low right there. And I think the probabilities of the stock moving from the 180s down under 150 in the next several months is very high. That is my intermediate look at Amazon, and very much in line with the weakness that we see in a lot of these retail stocks, especially those dollar stores that I've showed you, the breakdown in Dick's. And I don't think Amazon's going to be able to sidestep the problems that we see for consumers. Katie, I'll turn this over to you to take a look at light crude.
Okay, let me share my screen. Let me know when you can see the weekly chart of crude oil.
Gotcha.
Okay, great. So we're looking at an intermediate term bearish trade idea in crude oil futures. So this is the weekly chart of /CL. We have harmonic families in here. That's a very large dominant 78 bar cycle that is divided into minor third cycles of 26 bars each. And you can see how each of these has shaped up the rising phase, peaking, declining phase of each of these minor cycles. So now we have broken below the cycle low support of that second minor third cycle, and also now, as of today, broken below the cycle low support of that first minor third cycle. But overall, this cycle has, the dominant cycle has just exhibited a lot of sideways price action. Now, however, we're getting into the declining phase of the dominant cycle as well as that last minor third cycle. So we're going to have a lot of pressure on the downside as these energies are pushing down. We do have a projection. It was down to 67.70, but we're already below that. So we'll have to lower this projection. This next one is down here at about 64.35. Momentum is negative. Here's our reversal scout. That's this green and purple ribbon currently showing negative momentum conditions. We do have a cycle timing window out at the end of the year when crude oil could start looking better. Let's switch over to the daily chart. The average cycle length in here is 40 bars, and these cycles are divided into minor half cycles. So as Slim has noted in here, this could be an early minor cycle low, or if we're able to get a bounce in here, this could be slightly late minor cycle low. It has tried to move up. You can see the wicks on the tops of these candles, but it keeps getting sold. Our dominant cycle low was back here where you see this hammer candlestick, and we have broken below that level. So if crude oil is able to get a bounce in here, then that would set up a good selling opportunity for a move back down into this timing window at the end of September. Beyond that, the next daily cycle is due to end in mid-November, so that is starting to line up with that weekly cycle timing window. Now, I do want to point out that crude oil has a tendency to sometimes move up very strongly in these rising phases, even out of a negatively configured cycle like this one. Negatively configured means it ends lower than where it began. In this case, it was much lower, but it moved up sharply, got to the 78.6% fib. This was a move up to the 78.6% fib, so was this. So this is something that I kept in mind when I did a video for our members that used an options expiration cycle out into the mid-October timeframe, 41 days to expiration. It was a bearish trade idea in line with the analysis that I just talked about here, but also protecting against the possibility of a strong bounce up coming out of this cycle low. So please become an askSlim level 3 or 4 member to check that video out. And if RV is ready, I'll turn it over to him. Otherwise, Matt.
I am ready. Okay,
Okay,
perfect timing. Thank you, Katie. Let me
sure.
go ahead and hop over. We'll share our screen. Matt, would you mind just enable screen sharing for me, please?
No problem.
All right, let's go ahead and share our screen. Hop into this long idea we have in low, which is interesting given the very large sell-off we're seeing in the market down about 96 in the ES. We'll pull up the intermediate term here in low once this loads up here. You can see on the intermediate term, this is overall acting quite well. We're only down about 29 cents here in low. And we are holding just below that 78.6 fib right there at around 251.50. This is a higher cycle high versus the old high and a higher cycle low versus the old low. So the overall move would indicate that the odds favor a target of around 262.50 on the intermediate term in this rising mode that we are in still right now. You will see that we haven't had any selling below our key 38.2 to the 61.8 from 237.39 to 227.61. So overall, the odds do favor another test up coming here on the intermediate term. If we jump over to the short term, you will see the levels here along with the timing. We have Home Depot in green, and we have low in blue. There is a trough that is due in low, 829 to right around 912. We are watching for this to hold right around here, 243.43 to 240.42. If it loses this 61.8 fib at 237.40, that would have this be a loser. So you're looking at a risk of right around, let's just call it $6 here on the downside. And I'm looking for a move back towards this old swing high, which is, if I bring this over at 253.20, and then a move to the base of this zone here. So 253.22, right around 256.86. So on the upside, we're looking for a move of about, let's just call it 9 points or so on the upside. So it's a risk 6 to make up to 9. So that is favorable. And that's what we are watching closely, is for a low to form and then for this to curl back to the upside and then move through this old swing high right here. And I'll go ahead and hand this off to you, Matt.
All right, great work, RV. Great work, Slim and Katie as well. Slim mentioned I'm going to be looking at Deere. I'm looking at a short-term long side here in Deere. I'm sharing my screen. Okay. So what we have going on with Deere is I'm going to start off by looking at the weekly chart. But taking a step back, it's always critically important that we stay as technical analysts bull bear agnostic. So that's something that we are very proud of here at askSlim, is that we are bull bear agnostic and we let the charts do the talking. So we stay very strict, consistent with our methodology, and therefore with our trade planning guidelines, as hopefully you've seen over many, many weeks of us doing this. And we do have a huge archive of these trade planning segments up on YouTube. If you're new, you can check those out. Okay, so we're looking at Deere, and what I'm going to do is use the askSlim methodology to step through answering some of the core trade planning questions. So we talked about outlook period. My outlook period is over the next 2 to 3 weeks, so short term. Why do I have a more bullish or long side directional bias? So that's going to use the askSlim methodology to walk that through. Key levels, including reevaluation. Once you complete that, you always want to ask, do I have an edge? As RV talks about all the time, what's my risk reward ratio look like? And then that you're not done yet. You have to make sure that you have already planned for what your signals are going to be that would suggest that your trade setup is a go. And most importantly, we always have to make sure that our risk and money management position sizing rules are in place before you get into those trades. All right, on the left-hand side, here's the weekly chart. On the right-hand side is our daily chart. And what you'll notice here on the weekly chart, going back here and Deere, geez, back to about September of 2022, all the way through now, is that we have this very large coil forming, this triangle pattern with resistance here, as we have formed a series of lower highs up here, and then also our higher lows down here. So we have this coil pattern forming in this sort of this major big picture. But then as we zoom in on this current cycle, it has been extremely choppy. So Deere started off here with a cycle low, and then had a pretty strong rising phase, actually breaking out above that prior minor peak. But then once we got up here, you can see we got up into this resistance zone, and it failed really hard, and the reversal scout rolled over. We actually took out that prior cycle low, which was negative. And then as we got in about that midpoint of the cycle, Deere started to take off again, and that was with the help of the earnings. And with that momentum, which now is positive on the weekly chart, we actually pushed through the intermediate 61.8, almost testing that intermediate 78.6. So overall, I would call this in the weekly pattern here, the cycle structure more neutral, because we did have that breakdown, but we are attempting to really get higher here as we push to that 61.8, nearing that 78.6. I'd like to see a close on a weekly basis above that 61.8, would really tell me that the bulls are acting very strongly. But right now, that's not the case. We're in that resistance zone. It is acting pretty strong relative to the overall market, as it's up $1.22 today. And the momentum, again, is positive. So that over a weekly analysis, I would call it more slightly bullish. But this is a short-term view on Deere. And since I don't have anything negative in terms of the weekly analysis, then I can move over into the daily with that more positive outlook. And you can see here, and what I'm going to look at is this recent cycle, or the current cycle. So we started off weak. However, this whole cycle has been tremendously strong. So we have a breakout, cycle peak breakout here that occurred in this cycle. We also are experiencing a strong right-hand translation, which is positive, meaning that we've basically used the entire cycle to rally, and the peak, which occurred a couple of days ago, I'm going to call it, occurred about as far as you can on the right-hand side. We also have momentum in terms of our reversal scout and the slim ribbon, both positive. So those conditions all would suggest to some of the evidence that we overall have a positive directional bias in the short term. at this current moment, we are within the cycle low timing window. So that's the largest period of risk where you can expect to have volatility and where you're looking for a low to form. Now, this low should form obviously well above where that prior low is. And what I'm watching for, and typically when you have a strong trending market, is that you're going to see the slim ribbon act as support. So I'd be looking for that slim ribbon, probably the second band or the third band, to act as support as it forms its cycle low. And this overall pattern, along with the momentum, is suggesting to me at this point that there is an upside projection zone here that I'm looking for over the next 2 to 3 weeks for it to challenge, that runs from about 402.76 to 412.55. The reevaluation level would be around 373.90. So I don't want to see it violate that, because then I would have to reevaluate the projection. Now, that doesn't change the overall positive bias. So I'd need to see a daily close below the short-term 61.8, which is around 362.5. If we do that, then the overall positive bias, the long side strategies, have to be reevaluated very thoroughly. But at this point, Deere looks strong, and a minor pullback should present itself with a buying opportunity in terms of signals that would suggest an opportunity for Deere on the long side. I'm going to pull over one of our custom level 4 grids. We call this our trade setup grid here that we use for our chart streams. So from left to right, we have the weekly chart, we have the daily chart, 2 hour and a 15-minute. Now you can expand each one of these, but we like to look at things in multiple time frames. And I already went through that weekly and that daily chart, but now I'm talking about, what would be signals that would suggest that a long side opportunity might be presenting itself. Well, the first indication is going to be in this 15-minute that would suggest that there is a likely minor low forming, and that would be if our slim ribbon would turn positive. And the reversal scout isn't going to be enough for me when I'm looking for a short-term outlook on if it's just a near term, the reversal scout's okay, but I want to see the slim ribbon turn positive, because the slim ribbon is more of a momentum trend indicator and it's less sensitive. So I'd like to see that turn positive. So that would be one indication. But really, I'm going to be looking at this 2 hour. And if we can see that, if that reversal scout turns back up already, then I would be watching that low really closely, that there could be an earlier low that formed, and we're back off to the races per se on the upside. Now, until we get through that cycle low timing window, again, there could be a lot of volatility. It could pop higher and then we could get a pullback. Typically, you see a low form inside of the second and the third bands of the slim ribbon. So right now, this would be more of a rare situation if a low would form up on the first level. But as you're looking to build out a position, these are the kinds of things you have to consider. So if we get that reversal scout turn back up, that would be an indication. Also, I'd be watching the slim ribbon PO, which is a proprietary indicator that Slim built. And that one's going to be measuring the momentum in our daily chart here. In particular, I'm talking about, it measures the momentum in all of these time frames, but what it's really the key piece of functionality with it is it lets you know when the likelihood of a continuation is signaling. So what that means is as a pullback happens within a dominant momentum condition, like you'll see here, it'll give us this indication of this line. We have an oscillator that's built into here that will go oversold. And as long as the dominant momentum does not get violated and shift to neutral, you'll see a green arrow that signals a likely continuation. That's what we had here with Deere. So this was a very good short-term swing opportunity with Deere. And so that's what I'm going to be looking for again. But this is one of those indicators that helps with signals that let you know a trade is a go. We don't use any of the indicators in isolation. We always try to look at a sum of the evidence. So those are some of the examples that I would look at. Also, you can look at price. You can do a draw, from a swing high, and then look for a swing low. And we like to look for a break of that 78.6 on the retracement. So if I take from this recent swing high from just the other day to where we are right now, as an example, if I saw a breakout back above, if you're a breakout kind of trader, then something about 395-ish, that would tell me that then another move is likely underway. All right, that's my analysis in Deer, and I hope that was helpful.
Wow, tons of stuff there. Great work by everybody. Quickly, Matt, you did mention chart streams and that grid there. We have what is it, 11 different of the key symbols that we broadcast out live all day long. Is that correct?
Yeah, that's right. Yes, the grids like you see right here, and I'll pull up another example. Here's the NDX.
I
Let
took
me
back
get
the
one.
screen, so.
Oh, okay. Yeah, so we have 11 symbols that we do a daily stream of our analysis on, and you can watch that if you're a level 3 member. But the benefit of being level 4 is you get direct access to these grids, and you can open up live on your own platform. And the trade setup grid that I showed as an example, if you're level 4, you can request that, and we help you get that set up. And it is probably our most popular grid to use, where at a glance you can see a directional bias based on pattern, based on momentum, whether you're a near-term, short-term, or intermediate trader.
Great, great. Yeah, that's a great tool. Those are great tools. So thanks a lot for that. That
Absolutely.
wraps up our trade planning with the askSlim team. All right, Matt, I'm going to give this back to you. Matt is going to review our services, specifically our level 4 special, which is just wrapping up this weekend. Matt, you can take it back.
All right. Okay, so what you'll see up on my screen is the askSlim homepage. And if you're new to askSlim, what we do is we offer several premium membership options, and we provide our subscribers with world-class technical analysis services, innovative trade planning tools, and comprehensive education for various trading styles, including a separate membership for day traders. So we have 4 core membership levels, and then we have that separate day trader membership. So basically, as you go higher in our memberships, what happens is that you're going to get a more broader and extensive technical analysis coverage in terms of the number of markets, stocks, ETFs, futures that we are covering, as well as access, as I mentioned before, direct access to the team's custom charts that we have and our custom indicators, as well as all the grids that you see us put up. We provide access to our members, so essentially you can follow along in live time with the work that we're doing. As soon as we complete our work, we share that with our members, and that information, those charts, can be opened up on your own Thinkorswim platform, which is required for the charts. So as Slim mentioned, we are wrapping up a level 4 special, and our level 4 special is a really good one. You're going to get 35% off a 3-month subscription, and that comes to $303.75. So that's $101.25 versus $159. So that's a substantial savings. I mean, it's a tremendous. There really isn't a. I know I'm biased in a way, but there isn't a price tag you can put on what happens when you get a level 4 membership because of the comprehensive information. And really, this is something that the team and obviously starting with Slim for the past 50 years has been in development and refined and evolving. So you're going to get access to the best of what we bring to the table on a regular basis. And it's not just about charts or the trade planning tools. It's also about getting access to a team of analysts. So this is what we do for a living. We're here every single day, all day long, essentially, providing information analysis and customer service to our members. And in particular, level 4 gets a priority when it comes to that. All right, so that's our level 4 special, but I already mentioned one of the key aspects of level 4, which is getting access to the charts. The other one is with our market conditions monitor. So I'm just going to do a very quick look at that. That's what I have up on my screen right now. You hear us talk about trade planning all the time. You hear us talk about the importance of understanding momentum. Well, that's what we call the MCM, the market conditions monitor, is going to do for you in a very, very powerful and specific way. So it consists of our 2 most dependable momentum indicators, our reversal scout and our slim ribbon. Okay, and what it's doing is we have an algorithm in the back end. We have an engine that is tracking all of the price data, and then it filters that out based on our slim ribbon, based on a reversal scout, and it in specific trader types. So whether you're an intraday trader, a near-term trader, a short-term trader, an intermediate time frame trader, you can look at the trade setup conditions. So essentially, we've created a giant shortcut when it comes to looking at the grids, like I showed before. So if I pull up this grid again, we have multiple time frames on here. And obviously, if you're a trained analyst or if you've been around askSlim long enough, you can quickly get a sense of what the conditions are. Like right now, obviously in the 2 hour, we got both momentum indicators are negative, and the 15-minute is negative. Just rolling over in the reversal scout on the daily in the SPX. My point with that is the MCM just puts it together for you and instantaneously based on those momentum conditions and multiple time frames. And what you can do is you can sort in this trade up condition to see which symbols I have changed most recently. So that's extremely helpful if you're an active trader. Also, if you just want to know, well, what's the momentum? Because trading against momentum carries a big risk with it. So the MCM has those factors built in. Furthermore, you have a alert system. So this is something new, and the MCM doesn't require any special software. As long as you have internet in the askSlim account, you can open it up at any time, and then you can download our app. So we have an askSlim app that we have built, and how that works is, so I was just talking about Deer. So let's look at Deer. I'm going to set a notification here on Deer because I want to be notified in the intraday if there was a bullish or very bullish shift in the conditions. So that would mean that the alignments here in the reversal scout and the slim ribbon in terms of 3-minute, 15-minute, 2 hour have basically all gone green. And if that happens, that is a good indication that minor low or that short-term low may be forming. And I want to be alerted to that because I might start to look to build a position around it when that happens. So what I can do is set those indicators for myself and then be notified when that happens. And with the app itself, it has a message feed, and you'll be notified both through the message feed as well as through your desktop. Right now I have it on mute, but if a message comes through, it not only comes through on the app, but also comes through on my desktop. So this is a very dependable and a very important aspect of trade planning is to know what the current conditions are and also to be alerted as things are changing, whether you're looking to add a new position, make an adjustment to a position. It's very, very, very important to have this type of technology. So again, the level 4 special ends this weekend, and you can get that simply by going to the askSlim site, click on the link, and you can sign up right now. If you are currently a member, free through level 3, you can upgrade and you'll get a prorated refund if you have any remaining premium membership balance. All right, that's it for today. Hope everybody got some good insights there. Back to you, Slim.
All right, great stuff. You go through that stuff. I am just so proud of everything that we bring. So what a great deal that is. And getting everything that's in level 4, 3, 2, and 1. Everything that we put out, you will have for this special. All right, this is our Q&A for the week. We're cutting off the questions right now. I have two things I'm going to do in the future side. I'm going to look at the dollar and at silver. We have some questions in here for the rest of the team on NVIDIA, Meta, Tesla, Eli Lilly, with a comment in there about some great work that Katie had done, Dell, XLE, RIOT, right, which I don't really follow, or SMCI. So you, Katie and RB, you can figure out which ones of those you want to bring. Michael's got a great comment here for Katie and for me. He says, Katie made a fantastic call on LLY, Eli Lilly, and having a downside expectation. Bravo on that. And he says, Slim's timing was impeccable in the general market. It has been pretty good lately. So thanks for that, Michael. And Michael's asking specifically to Katie, do you still see downside in Eli Lilly down under 900? So that might be one you want to look at, Katie, if that fits.
I will.
And
it's under 900 already.
Yeah, that's right. And then there was another question on for RV on Meta, getting it had a quick move down under 520, so you might want to take that one also. So I know the two of you are going to figure out which ones you're going to bring, and we're cutting off all of the questions right now because we don't have any time for any more. I'm going to switch over now and do the dollar and silver. Those are the two questions for me. So let's take a look here. I still have Amazon up here, but we're going to go to the dollar. You're going to find this to be super interesting on this analysis on the dollar. Again, remember that this is cycle analysis. And when you look at the bottom of this dollar chart over here, the daily chart, you can see 1, 2, 3 different cycles in there that, and 2 of them that are minor, living in each of these, what we call harmonic families. This is not unusual when we have it broken down into half minor cycles, 1/3 minor cycles, or even quarter minor cycles, because there are unlimited number of cycles that can occur in each of these families. Let's take a look here at the dollar right over here. And we can see that it looks like there's some change going on in here, because look at this right over here. This looks like this cycle has run really far. It says to me that there's a pretty good chance that this dotted one, this slightly shifted one to the left, is the one it's following and still moving to the downside. Even if it's this one that ran a little bit long, it doesn't really change anything. Let's just look at these last 2.5 cycles right here, and you can see that what it really points to is an attempted rally to the upside. Now, this lower resistance over here is 38.2, this is 50, this is 61.8. We put these in on all of our charts. It makes it so much easier for traders to have all that information right in front of them. And you can see that we're looking for the potential for it to move up here to about 102.80. That wouldn't be a giant move on the upside, and then moving to the downside again on this weekly chart, whether it's following this cycle over here, which has a low due in the middle of November, or this cycle right over here, which has a low due at the end of January. In either case, we expect any upside on here to fail and then be moving down again. The key is that this low here and this low over here are about the same level, or the secondary low was lower. If this is the low, well, it has a clear breakdown in there. Momentum is negative on the dollar. So everything about this says to me, even if the dollar gets into a sideways chop, it is very likely to be moving down again. Let's look here at the daily chart. Now, this is so sweet when you look at this. It has everything in there that you have an alignment on the half cycle, which is right over here. That's the half minor. Here's your halves right in here. Look at the third cycle right in here. Here's that low right there on the minor thirds. And you can see each of these cycles, the minor thirds are very clear. As you see 1, 2, 3, just beautiful when you look at that. 1, 2, and 3. And now you're in this first rising phase right over here on the daily in clearly negative momentum. Look at these downward signals right over here. Each of these say momentum is going to resume on the downside, and you can see how well that worked just beautifully. And right now we're still under negative momentum conditions on the weekly and on the daily. And that says rallies can't get very far. This is the resistance there around 102.70. So it could get up into these minor resistance areas here, but then I think it is going to fail. Looking at the dollar, I want to bring in one more chart just so I could scare the pants off of you. This is the monthly chart on the dollar. This is pure magnificence. You can see the harmonics in there. I'm going back 25 years on this chart right over here, and those alignments are spot on. Where are we right now? Let's just take a look at these two harmonic families right there. This is the halfway point right over here. So this is a bullish cycle on the dollar. If the dollar was going to continue in the bullish condition that it was in, it would use these two rising phases to go back to a high. It didn't. It failed right over here. And the problem is that interest rates peaked, and we're seeing the interest rates going up in Japan, and that weakens the dollar significantly. And when the interest rates go down in here, money finds its ways to where it can earn more. And of course, you have the yen carry trade problem. So there's all kinds of things that are affecting the dollar. The dollar is not giving a flight to safety. And you can see that this whole minor cycle right over here gave you nothing but a failure in a sideways chop. That says that this decline right over here goes out ideally to sometime early in 2025. So this is a bearish condition on the monthly chart out into 2025. Then you get into a more favorable period. And then this period of risk that takes you out into, excuse me, 2027 out into August. This whole period that we're looking at over here is a period where we expect the dollar to have a lot of trouble, other than one period out over here that may be first half of 2025, where it can get a bounce. But each of these periods of risk here, where you get into all of the cycles coming to the downside, bring you large declines. This one from here from 103 all the way down here to 89. And I could easily see the dollar coming in here from like 100, 103, all the way down well under the 90 level. And that is a period of extreme risk out there. I think the dollar is in a lot of trouble for a very long period of time. And I think a lot of that is about de-dollarization and the BRICS, which are certainly going to stop doing their business in the dollars, and they're going to do it in their own currency. We're going to see that coming on. That's going to be a much harder currency that favors gold, that favors the metals. The weaker dollar favors the metals. All of this is key, very important analysis if you're really interested in the dollar and in metals. I wanted to show you that. I thought it was very important to the analysis. And right now we could get some bouncing in the dollar, but I think it is then going to go to the downside. Silver, let's take a look in here. I'm not going to go quite as extensively because that was a long bit of analysis, but I thought it was really valuable to see. Here is silver now. Silver had a very important bottom right over here. Gold went to an all-time high, and this rally right there. And of course, silver did not, and that's getting a sharp pullback as the industrial metals are under a huge amount of pressure. You can see what it looks like here on the daily. So here's your gold right over there. That's your gold bracket right there, which shows you the gold cycle. This is the silver cycle, which is a little bit off, and the gold corrective period in here, which is affecting silver also right there. So now what we're expecting is that we're in support, and we're going to start to get a bounce right in this period right over here in the silver market. But overall, I really don't love it. I think that the range that we're looking at in here of somewhere in the 27s up to $30 might be around for a long period of time, especially since I think that the stock market's going to have problems. And when you get into liquidation phases, that is not helpful for any of the assets. So silver, I'm just going to call it support in the mid 27s, resistance up near 30. And I think that's kind of a range we're going to see it in. If silver really turns a lot lower and gets under the 78.6% here on the daily chart, which is right. I'm not seeing this too well because there's a lot of lines on there. So let's get it from here to here. And I can see that this is misplaced right there. Let's just get these in the right place. So that right over there is 27.75, let's call it. If it gets under 27.75, I'm going to start to get a little concerned about the ability for it to get much rally in this period. And then, of course, if it gets under this level over here where it made that low, right around just under 27, that would be a very bad occurrence. And it would say the longer term conditions are not as good as my analysis has shown. So that's a look at silver. That's the two symbols I'm going to look at. And now I'm going to turn this over to the team.
All right, Slim, thanks so much. Let's go ahead and hop over to Meta, since that was one of the ones I highlighted last Market Week Live. And you'll see a pretty rare pattern on the daily chart. So let's first hop over to the weekly. So the weekly pattern, while it looks a little bit ominous here with these two equal highs, has not had any important breakdowns quite yet on the intermediate term. There's a 61.8 at around 480.50. 78.6 at 463 or so. If we lose on a weekly closing basis, the 61.8, that would be our first warning sign about this rising phase on the intermediate term being over with. Our next dominant low here is due towards year end. If we jump over to the daily chart, now this is where it gets rare. So this is why we aren't just going to be seeing levels and watching for them to just bounce off levels. That you have to see price confirmation, you have to see upturns to confirm it. So 2 weeks ago, we looked at a pullback that was likely here. We were somewhere back here. We were looking for this to get a dip back down, which it did. And then I was watching for it to try back towards those highs. That's what I was looking for. But what happened is it did sell off into this zone right around that 519-ish area. Then it ended up forming its low at 512. Got an uptick, but then you have to watch that really closely. If you draw your fibs in from that high to that low, you can see this is the 38.2, the 50, and the 61.8. Did it move through the 61.8? It did not. You had a tail, and then it turned down. It tried again here, and then this day says, okay, now we have to be looking at this as a rare one-bar rally, and now a left-hand translation into this next trough, which is due towards the end of the month, which there are many underlines which have lows that are due in the short term around that same time period. So it says right now, again, the overall bias has shifted to the downside, and this is a rare one-bar rally. You really don't see that all that often, but that is what has happened here in all likelihood in Meta, and we are watching for upticks to be sold, and then for us to roll down into this zone here from 493.80 to right around 481. And, obviously one that has gotten meaningfully weaker here in the short term, but no breakdowns as of yet on the intermediate term. And I'm going to go and hand this off to you, Katie, for the rest of them.
Okay, let me share my screen. First, we're going to look at NVIDIA. Let me know if you can see that.
Yep, good to go.
Okay, great. So this is the weekly chart of NVIDIA, and we moved up nicely into this target zone and backed off from there. A couple of weeks ago, we declined all the way to this intermediate 78.6% fib. So that combined with the negative turn in momentum here with the reversal scout said that rallies should fail, and we got a several week rally up into this zone again and now backing off. We have a timing window that's coming up between October 7th and November 11th. And so with the downturn in momentum again, we are targeting an area of a retest of that 78.6% fib. That's right around $90. If it wants to get weaker than that, it could get down to 76, which is that prior cycle low support. If we switch over to the daily, you can see that we are right inside this daily cycle timing window. So we thought we might be getting a move up yesterday, and then that finished today with this engulfing and targeting this short-term 78.6% fib. So within the next couple of days to a week, we are expecting the market to attempt a rally. So this is kind of in line with that. But getting down this far and with the weekly cycle timing window coming up, which this next cycle is in sync with, we would expect to rally up into the resistance zone, and that would be a good selling opportunity for one more push down into the downside. That's NVIDIA. Let's switch over to Dell. Okay, so we got below the 78.6% fib here. We got a couple weeks of rally, and I would expect one more retest of that level down to the prior cycle low support out in the later part of September. We are just entering that weekly cycle timing window. Momentum is negative. Let's switch over to the daily chart, and you can take a closer look at this. So, and this might actually be a shifting dominant, kind of looking like that. So we could expect, we'll find out here shortly when we get this short-term low. Will it bounce and fail again, or will this be the low? For now, I'll put this back here. So we're going to enter the daily cycle timing window next week, and this next subsequent cycle doesn't end until 11:12. If we go back to the weekly chart, you can see that that's way into the weekly cycle. So we would expect that if this dominant cycle is correct, we would get this push to the downside and make our intermediate and short-term lows here. However, if this is shifting over as a dominant, then we could get the intermediate low and short-term low synced up out here. Momentum has just curled over today with the reversal scout, and the slim ribbon is negative again. So for the time being, this would be a bearish symbol. I will go now to Tesla. Here's the intermediate term Tesla. We have a cycle timing window coming up October 7th to 11:15. Many symbols are due to bottom in that time frame. So we did get this rally, but again, we would expect this to fail going into that timing period. We're projecting a retest of this level down to the 78.6% fib. If it gets even weaker than that, then we have the cycle low support down here at around 139. Momentum is negative on the intermediate time frame. Here is the daily chart. We've got a 30-bar cycle. We're right in the middle of the timing window now. Got a bearish engulfing candlestick today. Momentum is still positive. So sometime in the next few days, we would expect this to form a low and in line with the rest of the stock market, try to make another move to the upside. But this cycle would be in sync with the weekly cycle timing window. So we could expect some weakness or breakdowns to develop there too. For the moment, however, this is a positively configured cycle. So if you were interested in doing a near-term trade to the upside, you might be able to do that, but I would be especially cautious because we are expecting that weakness to develop. Next, we have Eli Lilly. Over here, okay, again, a timing window between October 7th and November 15th. So many symbols doing that. This did get down to the 78.6% fib, but it was almost like a flash crash. Of course, it was on earnings, so it made its way all the way back up here and then made a new high. So technically, there hasn't been a lot of damage to suggest something extreme. We do have this support zone in here now, and I'm just projecting to the top of the support zone, which is at around 875 over the next few weeks. On the daily chart, we are in the middle of that timing window, so we would expect a bounce and then another failure out into that October timeframe. Momentum is still positive here, except for the reversal scout has just turned over, but I would expect within the next week to get a move to retest this high at 972.53, then a possible failure and a move down. XLE is the energy ETF. Timing window coming up October 9th to the beginning of December. We have negative momentum again with the reversal scout having turned back. It was very choppy in this area. And we are projecting, we've gotten below this support zone and now we're heading towards the 78.6% fib at around 83.5 out in that October time period. Let's look at the daily chart. We have negative momentum, both the reversal scout and the slim ribbon. We've gotten below all of these levels, so we would have to lower this projection now, perhaps down to that cycle low support. And that timing window is coming up 923 to 10:1. So this next cycle out here could give us our intermediate low. We would expect rallies up into this area to fail and move back down, and then the similar kind of weakness out in this cycle over here. So we've got quite a while on the downside for XLE, in line with crude oil and some of the other energy stocks. Riot. Let me kind of zoom in here so we can see it better. We are right inside the weekly cycle timing window, trading right at the intermediate 61.8% extension. We are expecting to move up into this resistance zone sometime later in the fall. It is a declining resistance zone. We have no sign yet of a bottom having formed. It could certainly get lower than this. We do have a 78.6% extension down here at about $4.50. So this is not a buy yet. You have to wait for some evidence of a low forming. On the daily chart, we do have a timing window coming up 9:12 to 9:20. So towards the end of the month is when we would expect that intermediate low to form. If it got a bounce in here, we would expect one more push down to the downside. Of course, as I mentioned, around 4.5, if it wants to get really weak, is that next level down on the weekly chart. But this is still negative, still a bearish trade. And last, SMCI, supermicrocomputer. Let me move back to the weekly. This is showing a lot of weakness. It tried to bounce up into this zone, could not get up there. And so we are targeting this level at about 307 out in the timing window. Again, that's between 10:14 and 11:22. Right around the time of earnings. So we might see a pop on earnings to begin the new rising phase or something that takes it down here. But this would be rallies that we would want to sell into that October timeframe. Over on the daily chart, this has some uncertainty. Was this the low inside that daily cycle timing window, or are we forming a late low? If you notice, some of these vertical dotted lines show where the actual lows occurred, and this one was a little bit inside. So maybe this will get a bounce up towards this resistance zone with the rest of the stock market coming up, but this would be expected to fail into that timing zone. So if we do get a bump, then that would be a sell. And that's all I've got.
All right, super job, everybody. Hope that the people that were here, level 1 to 4 members, liked what they saw. That's what we want to do, is we want to invite people that are members to come in and be able to ask these questions about analysis, trading, whatever it is that you could use some support on. So good work by everybody. Katie, you did a lot today. That's great. So
Thanks.
all right. All right, so we're going to move on right now and take a look at the analysis for the stock market. Before we do that, there's some important information. Make sure that you read this slide. It tells you about how our approach to the market looks at some very specific mechanical ways that we do our analysis, and how you can use that analysis for yourself, with the very important aspect of owning your own trade. Once again, level 4 top tier final weekend. Earlier in the show, Matt gave details on this. So there's only a few more days. You can get 35% off for level 4. It includes level 3, 2, and 1. Everything that we bring, amazing content and education, 35% off. It's only $101.25 per month for 3 months, regular $159 a month. So go to the top, askSlim.com, and then click on that level 4 special offer. Get 35% off. You can get more information there, or write Matt at askSlim.com. All right, stock market analysis. I'm going to look at multiple time frame analysis and projections of the S&P 500, the NASDAQ, the Russell. I think I'll also take a peek at the VIX because a lot of people like to see that. And this is what the charts look like when I send it off to the members, level 4 members, where they get this live in the Thinkorswim platform. And you know, for everybody else who may be interested, this is our futures hub. And what this is it looks at the analysis of all the futures that we do analysis on. They're colored based on the cycle conditions. And what's important is that, you know, I bring you this analysis and it shows you what our cycle analysis is. You can get that as it's updated all the time. And every time I do updates throughout the week, I give you my most notables, and it tells you what my opinions are in each of these right there, as you see there, on the stock indexes or the treasuries or the currencies. All of those as I update them, as I update the charts, I update the most notable. So you get a good sense for my opinion. So I wanted to show you that this is our futures charts hub available for level 3 and 4 members. This is included if you take the level 4 special that we're running right now. So just wanted to show you that because a lot of people wait for our updates in between these shows because you're not premium members, and this is a good way to become a premium member and to get those updates all of the time. Here's the S&P 500. Now, S&P 500 looks to me like it's making a double top. Now, it's not really broken enough to be sure about that, and it's going to take some time for us to know whether or not that really is a double top. The period of risk that we saw was September through November. I thought maybe it would be mid-September or something like that, that period of risk really comes in. But there's a lot of selling coming in, and we have a lot of volatility right in this period. This left a hanging man on the monthly chart, and that hanging man is a sign of a market peak. That happens very rarely. There was 2 hanging men that occurred on the monthly chart in 2000, just before, as the market was peaking, and one in 2007. So it's very rare. In this case, what we're seeing here is this big decline, the big rally, another decline. All of this is an unhealthy market that we see. And I think it's making a very, very important peak, but the peak I'm not sure is in yet. First of all, momentum in here is still moving up. It's been volatile, but it's still moving up, even though we have this big downside bar. One big downside bar doesn't make the peak. Here, as you can see, the half cycle right in here. We were looking for a bottom here in the first week of August and got it right on time. We were looking for a rally. It went further than I expected that it would, but now pulling back. Again, this window of time right over here is out in, let's just call it right around November 1st through out over here, December 1st. This is where we expect that the trough is going to come from this market. And it could get easily back down to these lows in here. This low right there was 51.14. And this low right over here is 48.35. It could go that low sometime between now and December. We do not know how the market's going to act around the election. I think it's going to be very nervous around the election, but I'm biased by what I see here in the pattern. So the S&P 500 looking to me like it's making a double top. We don't have proof of that yet. What will give me proof? So here's your daily chart right over here. This has been really pretty. I mean, it rallied up further than I expected, but still the shape of the pattern and the timing of the pattern is really right on. And you can see in the bottom, the option bias study, which shows you how to keep your option biases, your positions biased. And it's been green through all of this time period because it's affected by that conditions on the longer term, which are still positive. So it's saying to me that while if you had a long side bias on your option position in this last week, you probably didn't do well, but we knew this was going to be a corrective period right in here. So based on the cycle rhythm, you could have stayed out of trouble. Also, I said that this cycle has high odds of being the first daily cycle of the new minor rising phase of the weekly cycle. What does all that gibberish mean? It means that this would end up higher than it began as the first cycle in this minor cycle right over here on the weekly. So our members were very, very informed about that. And I said a negative configuration would be very bearish, but this is actually a positive configuration. So where do we go from here? Well, somewhere in here, we're going to make a bottom. I don't know if it's today or if it's a few days from now. I can't really tell that right now. So the choices are that the highest probability would be that this would come up again and test the highs right over here. And then we get into the period of risk right over here. And that would be where we would see the beginning of the market moving down into that period of risk in October. This is the highest probability shape of what we're likely to get. The only thing is that if this market stays weak, and it comes up into the resistance area right over here, which I don't have in there yet, but somewhere right in here, and then turns down and then takes out whatever low it makes right here, I will know that the market has peaked because we look at the shape of these cycles to be able to tell us the market condition. That will say to me the double top we're looking at here is correct, and the period of risk has already started. So I don't really know that. And you heard Katie refer also to the fact that we're expecting the market to move up in this time frame right over here. That's this cycle right over here, expecting a bottom to form and the market to try the upside. Cyclically, when I look at this, the shape says to me it will try to test the high. My gut tells me, based on what I'm seeing in the markets, it has a decent probability of failing in the resistance once we put it in here and then turning down again. I don't know which of those is going to happen. We're agnostic. We let the markets tell us. Right now, we're going to look at the probability of a low being formed here in the next few days and an attempted rally coming out over here into the next 1 or 2 weeks on the upside. If the market continues to fail in these next few days and then breaks under here under the 61.8, or even gets down here to the 78.6, this price level over here is 53.22. This price level here is 52.28. If those get tested, well, then I'm going to really have a better feeling that we're in for a failure in the next rally. If it stops in this area where it is right now, then the odds are pretty good that it's going to try to get up higher near those highs over there, and the double top is still in question. Let's take a look here at 6 months of momentum conditions, as you could see, and the slim ribbon PO on the bottom. We had some signals right in here that the market was likely to try the upside again, and it did, as you see, but it could not hold in there. And what happened was that it began to turn over, and now it has turned neutral. As you can see right over there, this is the slim ribbon. This is an area chart version of the slim ribbon. An extremely valuable chart. When you look at the slim ribbon PO on the bottom, the combination of these really gives you a good sense of what's going on. And here you could see that the momentum has now gone from positive to neutral right now. And when you look at the 2-hour chart, well, there's a ton of clarity in here. What I love about the 2-hour chart is that if you are an intraday trader, if you're a swing trader that trades the big swings during the day, or if you're let's say a short-term swing trader, you carry positions for like 2-3 days, or short-term option trades for a few days, this is a fantastic way for you to number one, how do you bias your positions? Number two is, what is your position sizing? So if you're making a trade that's against one of these the momentum conditions in here, your position sizing should be really small. You can see in here where it turned down right over here, which was on 9.3, and gave you this negative momentum, that it was telling you, if you're going on the long side, you've got problems if you're a real short-term trader. Use this for a guide, both in how you bias your short-term positions and in how you size your positions if you're going against the market. If you're going with the market and all of this looks positive with everything else, then you're going to load it up on the long side. If it looks negative with everything else, you're going to load it up on the downside. If you're fading this, you've got to be extremely careful if you're a short-term trader. So a lot of value there when you look at that 2-hour chart. Let's switch over to the NASDAQ right now. And you see these arrows. I'm just hitting these arrows to help me move through these charts. As you can see, it's a fantastic setup here. So easy to do. Here's your NASDAQ. As you can see, it's also has the same similar pattern as the half cycle right over here, made the bottom right on time. This broke underneath the support. It trapped me. I'll say it once again. The team warned me that this could be a fake out and I should pay attention to that. And they were right. But now you could see as it moved up here, this is weaker than the S&P 500. As the AI leaders, there's no more leaders in this market on the upside. If anything, there's leaders on the downside. They failed. The NASDAQ failed here in the resistance sell zones right in here, and then turned down again. Again, we're pointing to the downside. I think it's a high probability that out sometime here in November to December, we're going to see us at 16,800 approximately, with an outside chance here at 15,700. Here's that period of risk right in there and a failure in that sell zone. Momentum stayed negative, as you could see here. Remember the negative, remember the positive momentum in the S&P 500. It's negative in here, and it has stayed negative even through this rally, which was a pretty good warning. Here's your daily chart. You could see the formation, and here this one did test the 61.8. Beautiful shape in there. Again, what I'll learn a lot by what's coming out and what's coming next in here is this next rally right in here that's due to start in the next several days. Is that going to get up and test this level? When you get down to the 61.8, it's less odds that it's going to do that, but still could do that. I'd make it 60% that it's going to get up here and test this level. But again, if it rallies and then hits the resistances, which I'll have in here for members, and then turns down again, then it's going to set up a very, very negative condition. Again, you can see in here that the option bias indicator is influenced by the longer term that we've seen, and it's not giving us any kind of a, well, what are we getting in here? I have that wrong. So let me just take that out. It's giving you all of these yellows. They're hard to see, which is just all went to neutral way, way back over here and said that, well, these conditions are now neutral. Look at when you get an orange dot in here, which sometimes it disappears, but it warns us, then it sets the low, and that was really nice to see that, a good signal of a bottom in there. As you can see, you've turned negative here in the momentum in the NASDAQ. And again, you get this help on this 2-hour chart. And on the bottom here is the market condition indicator. When it crosses under the -25, it gives you a negative signal. And you can see that's what happened right in here, negative signal. This says keep your positions, your short-term positions on the short side. And let's take a look at the Russell. The Russell, again, when interest rates started to fall, small caps really started to rally. And this gave you a sharp upside move, but now failing in a pretty big way from that resistance level right over there. And again, this period, September, November, a period of risk. Expect this to get down to around 1968 with the potential of getting over here to 1887. Those are the downside targets for this period into November, into this election time. And you can see this evening star forming there, this big engulfing that formed right there. I don't think small caps are going to lead this market to the upside anymore. Here's your formation in here. It gets also down to the 61.8%. It's the same story. We will find out whether or not this has enough buying in here with the interest rates coming down to get up and test this level. I'm feeling some doubts about it just as a gut feel. But mechanically, the expectation is that it will test this level because this is a positive configuration right in here. Sometimes you get positive configurations that test the 61.8 that fail and get up into resistance and then come down again. That's about 40% of the time. So we're looking at about 3 to 2 that it's likely to be still positive. Looking at this and this potential decent rally coming in these indexes. So that's a look at the Russell. You can see the neutral conditions now on the daily momentum. And again, the same thing on this 2-hour chart. This 2-hour chart is so important, again, if you're a short-term trader, to really get a sense for conditions. You can even put it up for all, put up 4 charts, 4 quads on a chart, and put up all 4 of these indexes and put up these 2-hour charts, and you'll really get a good sense for the strength and weakness in the individual indexes. If you're a pair trader, you want to buy the strong ones and sell the weak ones, which is always what I say you should be doing. So there's your S&P 500 again, and this toppy conditions that we see in here. I want to switch over right now and look at the VIX. I'm going to bring the VIX chart in right over here and blow it up. So what we see in here is that we had this massive move up to 65 in the VIX and applied volatilities. And what we expected was, based on the short term right in here, is that when this daily cycle bottomed right in there, that we would get another move up in implied volatilities or a move down in stocks that aligned with the corrective period we saw in the indexes that I just showed you. Spot on, worked absolutely perfectly. And now the way this looks to me is that if you look at the dates right in here, this says sink trough in mid-October. This says sink trough in mid-October. What that says is that the market is likely to be trying the upside sometime into September and then again into October. And then here in mid-October is where there's some potential for the stock market to get really slapped. That's this right over here also, and for implied volatilities to really jump. I think what this is telling me is that we can expect a lot of choppy action between now and sometime mid-October, and then mid-October through sometime maybe mid-late November, some potential very big move to the upside in IVs and very good size move to the downside in the stock market. One more chart we're going to look at in here is the monthly on the VIX. I usually don't show these, but they're just so important. And that is, we said that this period right in here where these cycles were bottoming, we're going to bring us the beginning of a period that will last for a very long time of elevated implied volatilities. This goes all the way back here to, well, I can go all the way back here to 1990, where these cycles really started to line up. And this is just the beginning in here. And, you know, I've come out pretty bearish right now early in the show, and thinking that the market's going to have a pretty hard time making higher ground valuations and a lot of reasons. And I think that what we're looking at in here is many, many months of a lot of volatility in the market, and not a likelihood that we're going to see significant new highs in the stock market at all. I commented in the beginning of the show that there were a lot of analysts out there that are talking about 6,000 on the S&P 500, even 7,000 one analyst is talking about. I think they're completely wrong. I think that the outside is, if we really get a solid move coming, we could get to sometime in the next month, if these rally phases really turn out to be good, maybe 5,800 on the S&P 500, but my gut tells me no. And that we're going to try to get up and we're going to see market failures. Mechanically, things look to me like there's still decent upside attempts coming, and we're going to respect that. When I talked about in the beginning of the show about the tops that have formed, looking at monthly hanging men charts earlier in the show, I mentioned that 2000, 2007 had those. They still took months to form those tops, and bull market tops take months to form. They just don't usually have V tops like we see V bottoms. And that's why I think we're going to see a lot of wide swings and choppy action for months to come, with some significant risk to the downside. Again, I'm making the risk rewards maybe 3% up and over 20% down. That's pretty bearish. That's everything I have, team. Here we go. We shared a tremendous amount, and I sense some of you are cringing by the bearish tone that I have come to the show with. But you know, 50 years at it, I got to speak what I see. We had a great show. Thanks, everybody. And any last comments, everyone?
Thank you,
lot of
everybody, for
information.
participating.
Yeah, great information today.
Good stuff,
Yeah.
guys. Thank you all so much.
Really good. All right, so we're going to be back live in a couple weeks.
Sounds good.
All right.
Take care, everybody.
Bye-bye.